students. Welcome to the economics class. My name is Prachi Jain, and in this video we'll be knowing about the measurement of national income, which is the major topic in your economics of class 12th. So today we will be knowing more about measurements of national income. So first of all, we'll see the meaning of national income, that is, it refers to the factor income earned by the normal resident of our country in a year. So domestic income plus NFIA will be equal to national income. Now what is this domestic income? Income which is earned within the country, domestic income, plus NFIA, net factor income earned from abroad. By summing both, we will get national income. And domestic income को हम NDPFC, that is net domestic product at factor cost भी कहते हैं, plus NFIA will be equal to NNPFC, which is called as national income only. NNPFC is net national product at factor cost. And always remember that national income हमेशा factor cost पे निकाली जाती है. In India, CSO, that is Central Statistical Organization, estimates national income. तो इंडिया में national income कौन estimate करता है? That organization is called as Central Statistical Organization. Now there are various methods of calculating the national income. Three major methods are: first is your value added method, second is your income method, and third is your expenditure method. First of all, we will explore value added method. Let's see what's there in the value added method. So value added method is used to measure national income in different phases of production in a circular flow. Circular flow आप सब जानते हैं, 2 sector model, 3 sector model and 4 sector model. ये 3 तरीके के models हैं जिस पे पूरा flow base है, right? Every enterprise adds to the value of product which it purchases as intermediate product or goods. So I hope you know the meaning of intermediate goods. Intermediate goods are those goods which can be used further for production, and final goods which are directly used by the consumers. The value which it adds or added is known as gross value added at MP, that is market price, and in short it is called as GVAMP, that is gross value added at market price. A very simple formula is there to calculate value added, which is equal to value of output, that is nothing but the sales, final value of output, minus intermediate consumption, which is the cost. So suppose if the value of output is 300 or the sales is 300 and intermediate consumption is 200, your value added will be 100 rupees. Same, gross value added at market price is equal to GDPMP. Other ways, gross value added at market price is also called as GDPMP, that is gross domestic product at market price. So in short, you need to remember this thing. Next, we will focus on the intermediate consumption. So intermediate consumption is raw material used for production, by which more of the product is being created or produced. It is also known as domestic consumption plus imports. And in short, or if we talk about the formula, so IC that represents intermediate consumption, which will be equal to domestic consumption plus imports. So IC include both domestic consumption and imports also. Next is the value of output. Because in order to calculate value added, you need to have two components. First is your intermediate consumption and second is your value of output. So first, that is intermediate consumption, we have already seen. Now the value of output. So value of output is nothing but the sales plus change in stock. That we have already seen, that value of output is nothing but sales. Sometimes only sales is given, so you can take only sales. But if the change in stock is also given, then you have to take both. That will make your value of output. So value of output is equal to sales plus change in stock. And how you will calculate this change in stock? So change in stock is nothing but closing stock minus opening stock. It will be given in the question. Change in stock will be equal to closing stock minus opening stock. Or the other way to calculate value of output will be domestic sales plus exports. Domestic sales plus export also will give you the value of output. Now if we talk about numerical question, so only either this will be given or this will be given. Fine. Let's see one question based on the value added method. Then you will be able to understand this method more clearly. Let's see this value added method. So as we have already discussed, that value added method is the phases of production, different phases of production. Now there are three different phases of production that is given. Firstly, it's the farmer, secondly is the miller, and thirdly is the baker. And the output that each of them is giving, that is, farmer is giving wheat as an output, miller is giving the flour as an output, and baker is giving the cake as an output. Sales is given. So sales is that 500 of farmer, 700 of miller, and 1000 of baker. Intermediate consumption, suppose this is just an example to make you understand how you will calculate the value added method. Okay, value added method से आप national income कैसे निकालेंगे. So this is just the one example. So intermediate consumption at farmer will be 0 because this is the intermediate consumption only. For farmer, this will be the intermediate consumption and sales as well. So no intermediate consumption for farmer. Miller 500, and for baker it will be 700. Means they have used 700 as an intermediate consumption to give the output or the sale as 1000. Okay. So if we subtract, we will get 500 because the value added method formula is sales minus intermediate consumption, right? So 700 minus 500, 200, 1000 minus 700 will give you 300, and in total the value will be 1000. So this will be equal to GVA-MP, which is again equal to GDP-MP. Now there are certain steps for the calculation of national income, and these steps are: value added is equal to value of output minus intermediate consumption. Second, value added is equal to GVA-MP is equal to GDP-MP. And thirdly, it is GDP-MP, which will give you the national income. And from this GDP-MP, you will deduct depreciation and net indirect taxes, and you will add net factor income from abroad. After doing this, you will get NNPFC, that is the national income. And I hope you know that NIT is net indirect taxes, which you will get by deducting indirect taxes and subsidies. The difference of both is known as net indirect taxes. So indirect taxes minus subsidies will give you net indirect taxes. I hope through this video you might have able to understand value added method. And अगर आपको समझ में आया हो तो प्लीज़ आप मुझे कमेंट करके बताइएगा. And if you want me to make more such videos related with the other topics also, so please comment me. Thank you very much.